Hello everyone, welcome back. This is Jeff from Mysteel's Iron Ore Department, here to give you the latest on China's ferrous market. Let's dive in. At the beginning of last week, factors such as improved cost performance and the continued on-year decline in global steel production outside of China supported China's steel exports. Stronger than expected steel export data for May helped ease concerns of a sharp annual decline and briefly boosted market confidence. However, the release of China's May PPI, which posted another on-month decline, underscored persistent weakness in seasonal demand across the ferrous sector. Additionally, the lack of substantive progress in U.S. China trade and economic talks following the London meeting dampened optimism. However, renewed geopolitical tensions between Israel and Iran on June 12th triggered a rebound in ferrous markets, alongside gains in oils and chemicals commodities. Against a backdrop of subdued off-season demand, these developments have amplified price volatility across the ferrous market over the past week. Domestic steel demand in China remains persistently weak, exerting further pressure on prices. Seasonal factors such as heavy rainfall in southern regions and nationwide examinations have further constrained construction activity. However, demand for flat steel products has shown comparatively greater resilience, while the overall demand trajectory continues to trend downward. Ongoing inventory drawdowns, largely attributed to production curbs from maintenance shutdowns, have helped mitigate some of the downside pressure on prices. Both integrated and mini mills continue to trim output, which has put pressure on raw material prices. However, remaining mill profits have supported relatively high hot metal output compared to the same period last year, offering a degree of price support for iron ore. Although upstream coal mine production continued to decline due to ongoing environmental inspections, downstream steel and coke enterprises have remained cautious in restocking, resulting in weak procurement. Additionally, steel mills continue to reduce coke tender prices to secure steelmaking profits, raising the likelihood of 1 to 2 additional rounds of coke price cuts in the coming weeks. Looking ahead, fundamentals in the ferrous market are expected to remain under pressure throughout China's traditional off-season for downstream industries, representing the core bearish factor for ferrous prices in the near term. Additionally, market sentiment is unlikely to improve significantly without major supportive policies. However, escalating geopolitical risks may fuel concerns about potential disruptions to iron ore supply, which could increase market volatility in the weeks ahead. Thanks for tuning in to this week's China Ferrous Market Update. See you next time.